Gildan Media, a division of Recorded Books, presents The Great Devaluation: How to Embrace, Prepare, and Profit from the Coming Global Monetary Reset. By Adam Baratta, narrated by Adam Baratta. Publisher's note: this audiobook has bonus material. Please contact whomever you purchased this audiobook from to request the material. All figures referenced in this audiobook can be found in the bonus material. Limit of liability, disclaimer of warranty. While the publisher and author have used their best efforts in preparing this book, they make no representations or warranties with respect to the accuracy or completeness of the contents of this book, and specifically disclaim any implied warranties of merchantability or fitness for a particular purpose. No warranty may be created or extended by sales representatives or written sales materials. The advice and strategies contained herein may not be suitable for your situation. You should consult with a professional where appropriate. Neither the publisher nor the author shall be liable for any loss of profit or any other commercial damages, including but not limited to special incidental, consequential, or other damages. Special thanks to Kirill and Josh, the very best business partners one could ever hope for. Thank you for being great at what you do and allowing me the opportunity to keep telling this story. To my brother Andy, the true writer of the family, thank you for your keen insight and for challenging me. This book is far better because of your input. To Chelsea, the glue of our firm and the rock I can always lean on. To Uncle John, our debates have helped me immensely. Thank you for your consistent encouragement and generosity. You can't print gold. Mom, your hand is forever on my shoulder. I continue to aspire to the illustration of your grace. For Charlotte, you are the music to my words and the perfect melody to hum along with in life. ABCB forever. To Giabella, our beautiful gift from God. Mommy and Daddy's love for you is more eternal than gold. Introduction. 1 minute to midnight. Had you told me 10 years ago that I would become a financial author and one of the leading voices in the world on the subject of gold and the global economy, I would have said you were absolutely crazy. 10 years ago, my life looked entirely different than it does today. Back then, my life was consumed with pursuits in the entertainment industry. I had spent the first 20 years after college making my way up the ranks in Hollywood, from actor to writer to director, and eventually to producer. I'm a storyteller at heart. It is what I am most passionate about. But 7 years ago, I came across a story that caused me to leave the entertainment business altogether. The more I learned about this story, the more I realized it was a story that very few people knew, that no one else was telling, and that everyone needed to hear. It's one I've become so passionate about, I've made it my life's mission to share it with as many people around the world as I can. Candidly, I was initially unsure that I was the right person to share this story, but have since come to view it as my obligation to share the enlightenment I have obtained with as many people around the world as I know need it. I have written books and newsletters, produced award-winning videos, helmed multiple documentaries and webinars, and even created animations and children's stories. I've given talks around the world, and my presentations have been subscribed to by tens of thousands of people. So what is the story I've been telling? Told in its simplest form, it's the title of my first book, Gold is a Better Way, and Other Secrets Wall Street Doesn't Want You to Know. The purpose of that book was to challenge the way people viewed investing. It explains how the Wall Street model is broken and why gold is among the most misunderstood assets in the world. It became a national bestseller. I believe Gold is a Better Way resonated for a few main reasons. The first of which is that I'm not an insider writing about markets in a boring way, but rather looking at and telling the story from a fresh perspective. The second is I was right. Gold is a Better Way was published on August 14, 2018. Since that time, the price of gold has risen from $1,192 to $1,498 today. It's an increase of 25%. The Dow Jones in the same span is down 25%. This spread is just the beginning and will widen significantly in the coming decade. I predict that gold will outperform equities 8-to-1 over that time. It's why I've put every investment dollar I have into physical gold. What makes me so sure? I believe that mankind is on the verge of making the same mistakes we did 90 years ago. Mark Twain famously said, "History may not repeat itself, but it sure does rhyme." The Great Depression that happened in the 1930s must have seemed impossible to comprehend to those in the peak of the roaring 1920s. But what happened then is an excellent roadmap for what's coming next. The order will come similarly. First, we will have a stock market collapse, followed by a recession, followed by a global depression, all of which will end in a monetary reset. This book is about how that will transpire and why mankind will continue to keep making the same mistakes in the future. The Great Devaluation was chosen as a title for this very reason, to remind people and to forewarn the risks. You should know from the outset that this book is unlike any other you will find on investing, gold, and the global economy. It is intentionally designed that way. I am a storyteller. That's my unique talent. My goal is to tell this story in ways that will make sense, that will allow you a real understanding, and to do so in a compelling way. This way you'll receive the maximum benefit and can take actions that will improve your wealth. I will try not to use the complicated language found in most books of this kind. Rather, I will use pictures and imagery, children's stories, and easy-to-understand analogies, all in an effort to simplify the story. I will provide a new lens from which to view the world that will finally allow you to see things clearly. I believe this story will amaze you, and once you hear it, you'll be even more amazed that you never heard it before. It features heroes and villains and danger and risk. It's the story of power, who controls it, and the tremendous efforts being made to keep it. Like every great story, this one has a beginning, a middle, and an end. While everyone is impacted by this story, very few are aware it's even taking place. That is why it's a story I am compelled to tell. This is the story of the world economy, the U.S. dollar, the Federal Reserve, and their arch nemesis, gold. From the beginning, the story was designed to be confusing. The Federal Reserve was created by powerful men who invented new words and ideas that regular people couldn't understand. In fact, the more confusing the terms were, the less questions that were asked. Over time, as the story has unfolded, the terms have become more and more confusing, the rules ever-changing, and the citizens more confused than ever. Why the importance for complexity? Because the stakes were too high and the reality was too obvious. The Federal Reserve is an institution that was initially designed to enrich a few wealthy bankers and titans of industry. These were the Rockefellers, the Vanderbilts, the Carnegies, and the Morgans. It was imperative that their true motives for the institution forever remain a secret. In order for the scheme to work, it had to appear that it was created for the benefit of the people. So long as these men could keep their true motives private, they could amass tremendous wealth and power, more than the greatest monarchs of history, all while claiming to be benefactors of the people. How did it all work? The creation of the Federal Reserve allowed the central bank to legally seize the money of the citizens. Its design allowed for the expansion of the money supply and for the funneling of the real money of gold from the masses to the few. These men got away with it, at least for a while. That is, until greed and corruption became too much, and they caused a debt crisis that led to the global economic collapse known as the Great Depression. By then, the institution was too powerful to be dissolved. It was too integral to the monetary system. Rather than become extinct after it failed, it was then taken over by the government and the politicians. Over the last 90 years, control of the institution of the Federal Reserve has been passed back and forth between the bankers and the politicians. Control by the politicians has allowed for the expansion of tremendous unpayable debts. Control by the bankers has allowed for massive financial asset bubbles that enrich the investor class. Over time, bankers and governments have been complicit. Today, we have both asset bubbles and unpayable debts. While it's still alive, neither side will ever admit to the true nature of the institution. This is why, as the story of the dollar has unfolded, the words used to define the rules have become even more complicated. Quantitative easing, federal funds rate, real interest rates, overnight repo operations, swap lines, foreign currency exchanges, inflation, deflation, and now negative interest rates and yield curve control. These terms and ideas are so confusing that most people don't even try to understand. Those that do are insiders who continue to benefit from the obfuscation. It's been said that power corrupts, and absolute power corrupts absolutely. The power wielded by controlling the U.S. dollar has been too much for either side to maintain. Each time they've abused their power, each time causing a massive debt crisis. Each crisis permits the wresting of power from the other side. We are at that crisis stage once again, only this time the Federal Reserve will not continue on. The Great Devaluation will be its end. The Great Depression of the 1930s occurred on the heels of the Roaring Twenties, at a time when inequality had created a polarized world. The debt crisis that caused the Depression looks in many ways identical to what we are witnessing today. I believe we have come full circle from where we were 90 years ago. We have seen this movie before. My purpose is now to share with you the similarities so that we may be aware of the risks and evaluate the best way to prepare. I recently flew to Canada, where I was invited to give a 20-minute presentation at the Vancouver Resource Investment Conference. The annual event was held on January 20, 2020, and was attended by over 10,000 people. The attendees came from all over the world to learn the most up-to-date information about precious metals, mining, and the world economy. My talk that weekend was on the fragility of the monetary system and how the global economy is in the midst of an unprecedented debt crisis, one that could be knocked out by the most unpredictable of catalysts. I argued that these events happen roughly every 90 years or so, and that when they do, mankind endures an event so big it changes the entirety of human perspective moving forward. I argued that the world was on the verge of such an event, and due to the weakness of the global economy, the event would lead to a reset of the entire monetary system. I titled the presentation, The Black Swan. The presentation I gave was intended to highlight how the exponential growth of the world's debt was akin to an unseen deadly virus. I had prepared a video sequence that showed a virus growing in a glass. The question I posed to the audience was, if we began an experiment at 11 p.m. with one deadly bacteria inside a glass, that then doubled every minute so that by midnight the glass would be completely full, what time would it be when the glass was half full? The point of the exercise was to highlight why mankind continues to make the same mistakes over and over again. The reason is that we are not very good at recognizing exponential growth as it is occurring. To prove the concept, most people guess the glass would be half full at 11:30 p.m. The correct answer is that the glass doesn't become half full until 1 minute to midnight. Of course, by then, it's too late to stop. I believe the demonstration was a good way to describe the problem with the United States national debt that had been growing exponentially over the last 20 years. Trump is on pace to double the debt of Obama, who doubled the debt of Bush, who doubled the debt of Clinton. The exponential growth of our debt has caused an asymptote. When that occurs, the curve then shoots straight up in a 90-degree angle towards infinity. My conclusion was that our national debt has become an uncontrollable, deadly virus that was already growing too rapidly to contain. Little did I know as I wrapped the presentation that an actual deadly virus called COVID-19 was spreading exponentially across the globe. As I was giving my talk, mankind was in the midst of underestimating the deadly coronavirus, a real-world black swan. It is incredible to consider, but the economic tsunami caused by the coronavirus pandemic is not the crash the Great Devaluation predicts. Think of it rather as the check engine light on the dashboard of the world economy. I could not have asked for a more timely or terrible warning to confirm the importance of the message of this book. As everyone now knows all too well, our economy is not the best ever. It's not in any sense strong. It is a house of cards constructed on out-of-control debt and fiscal trickery. The COVID-19 virus, of course, was unpredictable. I did not predict the virus. I predicted the response. In that presentation, I highlighted how economic shocks are inevitable and can come from out of nowhere. The conclusion of the Black Swan presentation was that the next economic shock would cause a serious recession that would force the Federal Reserve to expand its balance sheet $20 trillion, and that the national debt of our country would soon hit $50 trillion. I predicted that all of this would occur by the year 2027. The presentation has since gone viral across the internet. Thus far, our government's response to the crisis, lowering rates to 0%, and an immediate $6 trillion bailout is further evidence of the accuracy of that prediction. We can be certain that there are trillions and trillions of dollars more stimulus to come. It's the only thing they can think of to do. It may well get the economic engine of the world to last a few more miles down the road, but as we all know, you can only ignore that check engine light for so long before it dies altogether. There used to be two things in life that were guarantees: death and taxes. I believe we can now add a third guarantee to that list. Government debt is going to continue to explode higher globally. The only solution moving forward is to print more money. It is for this reason I am compelled to continue the story. The Great Devaluation picks up the story where gold is a better way left off. This story, however, is so much bigger than simply recommending investors to buy gold. The story of the Great Devaluation is a story about the state of today's polarized world, why we are all so angry, who has caused that anger, and the inevitable next steps facing the world. The former movie producer in me wants to summarize the story in the most impactful and efficient way. In the entertainment business, this description is called a log line and is a brief summary, 1 to 2 sentences, of what the movie, TV show, or in this case, book, is about, that hooks the reader in and describes the central conflict of the story. For example, the pitch for the movie Speed starring Sandra Bullock and Keanu Reeves, was Die Hard on a Bus. Following this formula, I would say that the story you're about to read in The Great Devaluation is the movie Groundhog Day meets the Great Depression. The Great Depression in the 1930s that ultimately led to that global monetary reset lasted more than a decade and witnessed the largest transfer of wealth the world has ever seen. The Great Devaluation coming in the 2020s could be even more painful and will witness an even larger transfer of wealth. This book highlights the similarities, explains why a massive devaluation of currencies is inevitable, and offers a solution that will allow for the necessary restructuring to transpire without another world war. I am an outsider who became an insider. I've dedicated the last 7 years of my life to learning insider language so I could interpret it all for you. I doubt that this book will ever be taught at Harvard Business School, but it should. The good news is you do not need a degree from an Ivy League school to position yourself for tremendous wealth in the coming decade. You simply need to remember history. George Santayana famously said, "Those who cannot remember the past are condemned to repeat it." Anyone wanting to predict the future only need understand and remember the past. The Great Devaluation, therefore, seeks to remind investors of the mistakes of the past, not in an effort to alarm, but rather to offer tremendous advantage in preparation for what's coming next in the future and the inevitable global monetary reset. That time has come. We are now only 1 minute to midnight. Author's note. Today is Mother's Day, May 10th, 2020. The final draft of The Great Devaluation was submitted 11 weeks ago on February 14th, 2020. Due to the size and speed of the economic shock presented by the coronavirus, I have been permitted by the publisher to add a new Chapter 1 and an addendum to the chapters in Parts 1 and 2 called 28 Trading Days Later, more or less. These addendums will highlight the most up-to-date data points and offer a rare opportunity for the reader to weigh the logic and predictions made within each chapter. The Great Devaluation is a prophecy unfolding in real time. While the impact of COVID-19 coronavirus has only just begun and remains unknown at this moment, I believe it will turn out to be the ultimate black swan and will change everything about our future. As a writer, I'm challenged by the speed of the change. As a forward thinker, I'm blown away by the early accuracy of the predictions. This rare combination allows the reader a clearer window into the future that should add deeper insight into the evaluation. Part 1. The system is broken. 1. Parasite. On Tuesday, March 3, 2020, the world's financial markets watched in stunned silence as Federal Reserve Chairman Jerome Powell announced an emergency interest rate cut of 50 basis points to the federal funds overnight interbank lending rate. At the time, the Fed funds rate was at 1.75%, and the Dow Jones was trading at 26,703 points. My colleagues and I took this action to help the U.S. economy keep strong in the face of new risks to the economic outlook. The fundamentals of the U.S. economy remain strong. Jerome Powell. Within minutes, the Dow Jones would sink over 1,000 points. Powell's emergency move would ignite the most volatile few weeks in stock market history, causing the market to whipsaw in 1,000-point swings up and down in the coming days. As the week ended, what had been the highest-flying stock market in history was monkey-hammered down over 10%, and the rate on the risk-free 10-year Treasury had fallen to its lowest yield in history at nearly 0.3%. Unfortunately, this was just the beginning of a very long month. President Trump, who for the first 3 years of his presidency had ridden the equity boom for all it was worth and had pinned his entire re-election campaign to the success of the economy in general and the height of the stock market specifically, seemed aloof to the situation. Weeks before, in February, he had enjoyed his highest ratings while in office, as the stock market boomed to all-time highs. On the night before the Fed's emergency announcement, Trump touted the American economy as the strongest economy in history and tweeted the following: "This is an incredible time for our nation. We are in the midst of the great American comeback. Jobs are booming, incomes are soaring, poverty is plummeting, confidence is surging, and we have completely rebuilt the awesome power of the U.S. military. Promises made, promises kept." Actual tweet, March 2nd. What did the Federal Reserve know that the president didn't seem to? An outbreak of a virus in China called COVID-19 had spread in pandemic fashion globally. While the virus had originated and expanded quickly in China, causing government leaders to shut down much of their country and disrupting the global supply chain, it was initially viewed by most of the rest of the world as remote and temporary. That perception soon changed as the coronavirus spread across Europe, Japan, South Korea, and the United States. The Fed understood the severity of the moment. This was less because of the medical science and more because they quickly realized the virus could be the catalyst they'd long feared. The coronavirus could be the black swan that could expose the entire global economy for what it was: a house of cards built on a mountain of debt, one that could collapse at any moment. The immediate problem for the Fed was that the smart money was very aware of the economy's underlying weaknesses. For over a decade, the Fed had pumped liquidity into the system through a series of interest rate cuts and balance sheet expansions. Wall Street had taken full advantage. For over 10 years, CEOs and corporate executives had ridden the free money elevator to the very top by taking on massive leverage and through stock buyback programs. The effect was a stock market that had risen to nosebleed valuations, completely untethered to underlying economic conditions. Stock prices had risen nearly 30% in the prior year, while corporate earnings growth had turned negative for 7 consecutive quarters. The annual chart displaying the trend lines between equities and earnings represented an alligator jaw, one that could collapse shut at any moment. The Federal Reserve hoped that the emergency cut announcement would signal calm to the market. The opposite occurred. On the announcement, Wall Street insiders, who had been looking for an excuse to exit, fled in unison. This was definitely new territory. Over the course of the previous decade, the stock market had always reacted positively to additional Federal Reserve liquidity. What had often been bad news for the economy had been good news for Wall Street. The money changers realized that the worse the real numbers were, the more free candy the Fed would give away. The more easy money, the bigger the sugar high, and the higher the equity markets would rise. Anyone doubting that truth needed only to look at the balance sheet of the central bank. Since 2009, anytime the Fed expanded their balance sheet, stocks soared higher. Anytime their balance sheet contracted, stocks dropped precipitously. During this time, the phrase, "don't fight the Fed," once a Wall Street insider secret, became the popular investment strategy for Main Street investors. This time, however, was different. Immediately after their emergency cut, the economy began seizing. Anyone expecting markets to soar on the lower interest rate news was made violently aware that the game...
Sample complete. Ready to continue?